Hello traders, Gary Wagner here. It is approximately 11:30 in Honolulu, 5:30 in New York, Wednesday the 14th day of March 2012, and this is the daily report for gold and silver. Drastically lower prices across the board in the precious metals markets, $30 plus lower in the gold market, as you can see, on a closing basis in between the break in the spot market, 1643.42. That is putting it down about 2% in terms of the net change on the day, 1.87%. Almost a 4% drop in silver, down $1.26. As you can see, current print on the board, 32.11. And as I said, that puts it down about $1.26 on the day. Of course, yesterday I sent out, not only in my email, but in my video address, that on any signs of weakness as we went into the announcement of the FOMC meeting to liquidate positions and take a small loss if we saw a break below 1686, assuming you got out at 1685 or 1684. The loss that we took was about a $15 loss on that. In terms of silver, when that announcement came out, silver was trading roughly at 33.48. So if you got out 33.30, 33.25, you took a small loss in that. We took very, very calculated risks. We took a small loss on both. After the tremendous gains that we had on our first trade, I'm okay with that. What I am really excited about at this point is that we are, in my opinion, moving into the final part of this correction. We've just entered our C wave, and on today's report I want to talk about pivots and where we can look for this market to potentially bottom so that we can take a position as we go into wave 3 of our intermediate impulse waves to the upside. Traders, I want to start by looking at our daily gold chart. It says 1414 minutes, but it is a daily chart. And here's what we're looking at. When we take a look at our wave count itself, what you will see is that we had our first of our impulse, of course, 1, 2, 3, 4, and 5. And what that did is that concluded wave 1. Now, wave 2 is typically going to be composed of an ABC correction. So we certainly had our A, our B, which was truncated because it didn't come up to the area. That's where we got trapped. And then here is our, of course, our C wave right in here. That will conclude the corrective period. And then once the corrective period is over, of course, we will look to re-enter an impulse phase as we go into an intermediate wave 3. And an intermediate wave 3, of course, is going to be composed again of traditionally or normally a series of 5 minor waves, 1, 2, 3, 4, 5. The question is, where will we see a termination in this wave 2 or in our C, which we're currently in? Now, the tricky part here is that we have definitely broken through our 50% level. The reason that we got out was once it went through that 38% level, and that's why I said that that was a critical area. We wanted to be out of the market on the long side, of course. And the question that remains is, will we test 1626? That's the 61% retracement. And traders, if you recall from previous talks that we have held, we always talk about the fact that that wave 2 is typically of the corrective waves, 2 and 4, the steepest or deepest of the waves. And you will get occasions where it goes to 61%. It's certainly gone past 38%. It's certainly trading now below this 50% mark. But the fact is that we have come very close to, if you take a look at the lows in these markets right in here, we have come very, very close to touching that particular point. And when we look at the low that we got, which is 1634, it is not that far off the 61% level. So, have we seen the low, or are we going to make another testing of this particular low in this area? And that is something that my belief is that the jury is out until we get a little bit more data. When we take a look at our candlestick patterns, our Henkin patterns, we are still in a corrective stage. There has been no indication, no type of pattern that we've gotten any type of a reversal. And realize what I'm looking for, whether it's this doji that you'll see here, a shooting star at the top of this market here, you can see this doji in a three-river morning variation here. You get an engulfing bearish here. You get an engulfing bearish here. You get a three-river evening combination here. You get an engulfing bearish here, and of course an engulfing bearish here. We tend to get some type of candlestick pattern that is indicative, that's giving us an idea that in fact the market is turned. We have gotten nothing yet. So obviously, recommendation is going to be to sit on the sidelines until we get that confirmation and enter the market from the long side. When we take a look at a Henkin chart, this is a 720-minute chart, meaning we have 2 candles per day. We get a much clearer picture of this A, B, C correction. And the one thing that you can see on the 720-minute chart is that when we take a look at it, we typically get our pivot points, as you can see here, where you get that small red candle and then that small red candle goes to green. You get that kind of a pivot point. You can see that right in here. You can see that in a couple of places. We certainly haven't gotten that yet. We can go to shorter term charts and we will see some sort of a reversal. But I want to keep this in terms of the time parameters with nothing shorter than a half a day chart. We are going to look at our gold market to follow suit in silver, because silver is in a very, very similar scenario in terms of what we're looking at. And you can see that in silver, although it's just a little bit different, let me try to line this up that's lined up pretty good there. You can see that we are just this 31.88 might in fact be support. You can see that this 50% level seems to be holding well. We've had lows below it, but not closes below it, which is different than we're looking at when we look at the gold. Because when we looked at the gold, the current prints were below the 50% mark. Here, we could actually find some sort of support in silver before we re-entered from the long side. Pivot points, 31.88, we want to see if that holds. And then in terms of gold, our pivot point has got to be 16.26. We want to see if that holds or breaks above 16.57. That's at 50% mark. But as you can see, it is in between both areas right now. We have gotten close to that low, but we haven't hit it. We are certainly trading below the 50% mark. We will want to sideline until we get more data. Fortunately, we did get out with a very, very livable loss as opposed to what would have happened had we stayed in and let our stops get hit $20 or $30 below where we got out. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.